Good afternoon. It's the Wall Street Weekly Wrap Up, June 3rd, 2023, and I'm your host, John Newquist. And it was a week, and we're not going to talk about NVIDIA. Amazon, they're talking about offering Prime service. That's going to be interesting. I don't know how they would do it. They'd have better off buying like a Dish Network and then trying to do their own system, but who knows? They might try it. I just can't see Verizon, T-Mobile, or Sprint saying, "Hey, come on and use our networks and undercut us." But they're doing same delay delivery, so a lot of stuff that's happening, with COVID when they were slower, is kind of going away, and they're really trying to, again, focus on it. We bought it. If you look over here, the 58-day and 200-day moving average finally crossed to the positive, so that's a good sign. If you're going to buy, good sign to try to buy it. SOFI, another one we bought, another cross, 50-day, 200-day moving average. The loan moratorium is coming up to expiring, so therefore they're going to start their student loan business again, and they're getting into everything. You got credit card debt; they'll be glad to finance that. So this is our other financial after J.P. Morgan, and we'll see how it goes. Again, we're going to keep a stop on it. And then stats of the week. Everybody's watching this OPEC meeting this weekend with Russia and Saudi Arabia. Russia was supposed to cut 500,000 barrels and never did. Oil's in one long downgrade, and everybody's thinking, when would you buy it? Well, it's coming down to this wedge here. Is it going to break up because China's coming back, or is it going to go below because the economy is stalling in China? So everybody's watching it. I think, like I said, it's going to be a summer. Usually you would expect China to do better, but they're having a lot of COVID right now, so maybe not. Could be an ugly summer for the oil companies. We want to buy them if they start to go below 60, because then hopefully the prices will be much reasonable. And then the indexes, oh my God, it's on fire. Holy, look at this. This is the Qs. I mean, the NASDAQ Qs. It broke above the trend. It's at a record. I mean, and they call it the Elite Eight. We'll talk about the Elite Eight at the last slide. That's the term I'm using because there are 8 stocks that are carrying the market. And if you're not in those 8 stocks, then you've got some issues, because you're probably floating around at the 0 point, 4% or so profits this year. And again, Dollar General, total chaos. They dropped the estimates. Here's a sector that was supposed to go out and have all the people go there because they couldn't afford Target or Walmart and everything else. And then they come out and said, well, we're not doing so good either. And maybe it's because there's no more dollar stuff over there. It's all dollar, quarter, $1.85, $2. So it's a mess. And you can see the market just punished it. It just dropped dramatically. And the jobs report jumped 3.7. Everybody was expecting about 3.5. That's a good sign. You don't want to see people out of a job, but I think it's the wage growth is slowing. That's the big difference. It's not at zero growth, but it's not going up as fast, and that's what people wanted to see. If we're going to get to soft landing, we need to have wages go down just a little bit and unemployment get up maybe on 4%. Lululemon is just hot. I mean, look at this. It was down, down, down. I mean, it peaked, broke up, and then drop, and then, oh, we're up. China sales, 77%. It just shot up like a rocket. So when's a good time to buy this? Well, if you look at the gaps, I always believe gaps will be filled like this. It got down here, pretty close, but this stock is expensive, so I would pass. I mean, I'll stick with our retailers, Walmart and Target. The opposite side of Walmart. A little bit more clothing than food, but holy smokes, they got involved with the these swimsuits where if you were a guy you could tuck yourself underneath, and that just blew up in their face. And that marketing side just goes in there, and it's people are slowing down. So I don't have a problem with Target. But a lot of people do, and so you can see it. It's slowing down. People are dropping it. Stock is down there. I think if we get down to 85, I'm going to buy it. I don't know how far this can go down. That's the whole question. It's you never underestimate how bad you can mess up in retail, as Bud has shown us with Bud Light. And again, the Elite Eight. I'm going to move this up a little bit. Here it is. 8 stocks. They are carrying the NASDAQ. So don't talk about the NASDAQ doing so great, but you take out these 8 stocks, it's not going to be so great. If you go out and take them out of the S&P 500, not so great. Who do we have? At the beginning of the year, we started with NVIDIA. That's up 169% this year. Facebook also started out with the year with it, 127%. AMD, 82%. Tesla we sold at 100% when it got up to 200. Amazon, we just added it. Google we've had. Microsoft we've had. We don't have Apple because Apple's not growing. That's the big thing. They said, well, great loyalty base, yes. But, I mean, of these top 7, we are in all 7 of them. Not that we're trying to play these momentum stocks. We just buy stocks that were good, profitable, and growing in their sectors. And that's the key. We try to pick the best in each sector. Again, we're overweight communication service and technology. We normally would have only, maybe 4 of these 7, but it's hot, and we're going to go with it. We also got Sirius, and we also got Snap, and not as good, but they're not bad. But these make up for the difference of what I call an average year versus a good year. So let's have a good week. Stay cool. It's been hot all week, and hopefully it'll be a little bit cooler. And I'll see you next week. Thank you.